Good morning, traders. Welcome to the Ichimoku Cloud Chart market review of the MAG7 stocks. But before we start, let's just take a big picture review of where do we stand with the Nasdaq and the Nasdaq 100 index. The Nasdaq Composite index is still stuck in bearish territory. Price action below the bottom end of the cloud is bearish. So far, bearish outlook since the mid-February really, so we're going into deep into the second month of a overall cloud chart bear market. The catalyst to look out for is any kind of close back above the bottom end of the Ichimoku cloud, but ultimately to be bullish we need to be back above the top end of the Ichimoku cloud. So bearish until proven otherwise, so to speak. As for the Nasdaq 100 index, still stuck below the cloud as well, trying to regain support at the bottom end of the cloud. You can see the standard line of the Ichimoku cloud is now a new resistance zone, and it's critical for the Nasdaq to stay above this bottom end cloud or close and trade above that zone. Now the Nasdaq 100 has got downside risk towards 24,574 as well as 24,082, so keep that in mind. But so far still bearish on the daily Ichimoku cloud. Let's take a look at the equal weighted Nasdaq index. Story slightly better there, still fighting for support at the bottom end of the cloud. The market will be really in trouble if the equal weighted one is also trading below the cloud. So watch out for any kind of downside risk towards this 8,546 zone. But this story is saying that the market on an equal weighted basis is under heavy pressure and it's fighting for dear life to remain in a bullish state. Price action within the cloud is somewhat neutral. From Ichimoku cloud chart perspective, because it can go either way, but as long as we stay above the bottom end of the cloud, we could rebound back up to the top end of the Ichimoku cloud, so keep that in mind. So we need to stay above the bottom end of the cloud for the equal weighted index to stay bullish, but so far is struggling to regain footing within the cloud. Now the Nasdaq 100 excluding tech, we had a nice strong bull market rally there for quite a couple of months, but now it's fighting for support at the top end of the Ichimoku cloud. If we start drifting through that support zone, then the bottom end of the Ichimoku cloud is the next downside risk target. So if the Nasdaq 100 excluding tech rolls over towards the bottom end of the cloud and then slice through the bottom end of the cloud, then this index is in bearish territory as well. So that's the big picture review. Nasdaq still bearish, Nasdaq 100 still bearish, Nasdaq equal weighted fighting for support there, and the Nasdaq excluding tech also looking for support at the top end of the Ichimoku cloud. Next up is the cloud chart and artificial intelligence trading review of the MAG7 stocks. I use the Fulgent AI engine. It sits on the MetaStock platform. More information is and the links are at the end of the show. Now the AI engine that I'm using has been trained specifically on the MAG7 stocks. And here are the trading statistics. The major market reversal signal, which is a nice swing trade and long-term position trade signal, is about 74% accurate on average. The swing trade setup is about 67% accurate on average. And volatility breakout and quick move is about 59 to 56% accurate. Now we've tested this over about 5,000 to 7,000 trading bars, and a few 100 million calculations was used in developing this AI. We've got about between 2,000 to 8,000 individual rules that make up this particular trading strategy using artificial intelligence. So every single possible technical indicator has been used and optimized to use in the AI process. Right, let's kick off with Apple here. Beautiful rebound here from the bottom end of the Ichimoku cloud. We did expect this support test to come. Just to recap, this volatility breakout signal had a nice trade up there, then got to the resistance levels. We saw the cloud chart shadow resistance zone there, consolidated back towards what we were expecting, the top end of the cloud, the bottom end of the cloud, and now we had a nice swing trade rebound rally from this cloud chart support zone at the bottom end of the cloud, as well as this exponential moving average. Now, critical to note that we need to stay above this bottom end cloud chart support zone for Apple to be bullish, but excellent trading opportunities here at this bottom end cloud chart support test. Next one is Amazon. Beautiful volatility breakout signal here. Very wide stop loss here at 188. And also we got a beautiful rebound buy signal on that support test there at 198. Now we're getting closer to the resistance at the top end of the Ichimoku cloud. Watch out for resistance at 222 and see what the price action will be like at that zone. We need to see a breakout past this cloud chart resistance level to be ultra bullish on Amazon, for example. So that's the catalyst to watch out for. But so far so good. Volatility breakout and rebound signal all doing well. Google. Now Google has had some beautiful lots of trading opportunities in Google for the volatility breakout signal there. Then it became too extended from the top in the cloud, took some profit out. And another volatility breakout signal. You had quite a couple of days to get into that one. The stop loss is very, very wide at 291. And we also had two buy signals here. This cloud chart support test there, as well as this one here. As long as we can stay above that bottom end cloud chart support zone, this rally should be okay. But if Google starts to stay trading below the cloud, then this cloud chart will change to bearish as well. Just note that these are these support zones here on the cloud. That cloud level is swing trade rebound support zones. If this 305 support level holds, the upside resistance target would be that top end of the Ichimoku cloud. So far so good for the Google trade. Nice trading opportunity there. Meta, this has been just the textbook example for cloud trading. We had a beautiful volatility breakout signal there, broke through the Ichimoku cloud, another buy signal there, and then reached our target. This was the 743 resistance target there, so that was time to take some profits out of the table there, off the table there. And then we had another swing trade rebound there that got stopped out there, but pretty close to the next volatility breakout signal that's active. You can see how the Fulton AI engine accommodates the very wide volatility adjusted stop loss. So it's still within buying zone here, as long as it stays above this exponential moving average 377. One could see another attempt at this resistance zone at 672. So we really need to see the price action back above 672 to be really bullish on Meta. But so far so good. The volatility breakout signal giving quite a lot of swing trade opportunities in Meta. Next up is Microsoft. Beautiful volatility breakout signal, buy signal there. You can see it got very close to the exponential moving average there, and also this was a major support zone. This zone here at 388 has been a major support zone to be buying Microsoft at. The upside resistance targets is the bottom end of the front end of the cloud there. We can see that's the next major target. 450 is the swing trade upside target in this case, with a very wide trailing stop. We don't want to really be below this low here. So far so good. The Microsoft trade also looking good on a volatility breakout and cloud chart rebound signal. NVDA. NVIDIA has been giving us a lot of water torture, but the encouraging sign is as long as we stay above these lows here, the rally should be okay. It looks like it wants to break out of a base. We have multiple bases here, but this was a really big one. It was trying to break out of that consolidation base. We all got very excited with that breakout past these highs, but it only reversed quite. It snapped right back below the bottom end of the Ichimoku cloud. From a Ichimoku cloud chart perspective, we've got plenty of buy signals in and around this support test here, because we're at the bottom end of the support range. We can see that these levels here, 175 is a major support zone. We can see where that support level comes from. So we strike long-term very bullish on NVIDIA. It's now back above, well, trying to break past the top end cloud chart resistance, but as long as it stays above 182, it should be okay for now. The volatility breakout signal has very wide stop loss there. But from a cloud chart trading perspective, we had two buy signals there with that successful rebound of the 144 exponential moving average, as well as the cloud chart cross signal there. So far so good. Now looking for the upside resistance targets of 190 and then this old high. But so NVIDIA is still looking good. As long as it's moving sideways towards grinding higher, this rally should be okay, as long as it trades above that top end of the Ichimoku cloud. Now Tesla is a bit of a problem here. still trading below the cloud. It looks like it's drifting lower from Ichimoku cloud chart perspective. We did have a nice volatility breakout signal there that ran into trouble there at the resistance zones there, and you can see it's making lower highs here all the time and lower lows, but it looks like it wants to bottom out in and around this 233 exponential moving average. So there's some swing trade opportunities here, but it'll be short-lived when we get so close to the cloud chart resistance zone, as well as where the 89 period exponential moving average catches up. So that is a major resistance zone, but it needs to break past that zone, and then the next upside target would be the 440 zone and the top end of the cloud there at 443, 447. That's 440. Yeah. So that's the scenario of Tesla. Not the strongest picture. Price action below the cloud is bearish, so for the long-term investors, you should really wait for it to break back above the top end of the Ichimoku cloud. But that's the scenario with Tesla. Had a volatility breakout signal there. There's a very wide stop loss on it, and we've got these beautiful rebound signals there on the 233 exponential moving average, with the upside targets the bottom end of the cloud and the top end of the Ichimoku cloud. Next up is we'll do a deep dive into the fundamentals, quantimentals of the MAG7 stocks, and we'll start with Apple, and we'll use the StarMine models, which is institutional quality investment analysis ranking system. The price momentum score is, these are per style rankings, so obviously the higher the score the better. We can see Apple here has got very high rankings on the price momentum score, so we could see some further upside momentum. Analyst revision score, the analysts are quite positive on the stock, as well as the smartest, the smartest portfolio managers out there that keep still buying the stock is there. Short interest very low, but the earnings quality is good. Per style rank of 97. So there we deep dive into the balance sheet and look at many factors over many years to see what drives the earnings quality and what drives the earnings, and the earnings quality rank is high. Not much credit risk there, and a very high ranking in the combined alpha model. The problem here is insider selling is still ranking very lowly, meaning there's quite a lot of insider selling, and then the two biggest problems is the relative valuation and intrinsic valuation is quite low. We can see here Apple is very expensive on a global ranking basis on these various matrices. So keep that in mind when you're trading Apple, that yes, we've got some bullish momentum. Analyst revision scores are moving up. The best performing fund managers out there are still accumulating the stock. No shorts squeeze rally expected. But it is still a very expensive stock. Next up is Microsoft. Let's look at the StarMine rankings there. Scroll down. Here we go. Smart holdings, short interest, earnings quality 74. Starting, slight deterioration there, but still in a good zone there. Credit score, structural, text mining score. These rankings are all very high. Insider selling, there's still a big problem. Relative valuation and valuation momentum score is the drawback there. So all these MAG7 stocks are quite expensive stocks, but we do have some good upside momentum in terms of the ARM score. Let's just check the price momentum scores. Not that strong. The intrinsic valuation, relative valuation, that's the problem there. Earnings quality so far so good, but the combined alpha model is not really firing on all four cylinders. Mixed bag in terms of the valuation, quite expensive on an EV to sales basis, PE basis. You can see Microsoft is trading a little bit, almost twice the, a little bit more than twice the industry mean there. Tesla, bit of a problem child, this one. Very expensive stock, trades in the bottom 10% of the market in terms of all these valuation metrics. Earnings quality is 53 per style ranking. It's very poor quality earnings. If you look at the income statement, balance sheet, and deep dive as to the drivers earning quality, lots of credit risk there, structural credit risk there. Intrinsic valuation rank is 1. It's in the bottom 1% of the market in terms of intrinsic valuation as well as relative valuation. But at least on the plus side, there's some insider buying in Tesla. So overall, poor quality business, earnings quality is poor. So this is literally a call option on the robotics and self-driving in the future. So there isn't really much in terms of the quality of the business model there. NVDA, looking really strong there. And on earnings quality, personal rank is 82. Credit risk structural, no problem there. Combined credit risk all ranked very highly. Smart holdings, the top quality guys are still top performing fund managers still buying it. Short interest is very low. Intrinsic valuation is a problem, and relative valuation is a problem. Price momentum very nicely there, still ranking very highly. ARM scores very high. Analysts are still bringing up their numbers, and the combined alpha model is in the 74th percentile ranking. That's very good. You can see NVDA is quite relatively expensive, but in view of the catalysts going forward in the AI space, this is a key holding, but we do like the earnings quality rank there. Next up is Google. Earnings quality 66 at this stage. That can be better. They need to do some improvement on the earnings quality there. Not much risk in terms of credit there, so the structural credit risk low, scores very highly, so the balance sheet is looking okay. M&A target model is not an M&A takeover target. Company is simply too big. Smart holdings, the top performing fund managers are still buying this, so the smartest people in the room are still buying it. Short interest very low. Price momentum 81, ranking very well. It's top 20% of the market in terms of price momentum, and analyst regional scores. Analysts are still upgrading their numbers on Google, so that's a very good point there. Valuation momentum score is not particularly good at this stage, so Google needs to improve on the earnings quality rank but the valuation momentum score, but the combined alpha model is ranking very highly there. Excuse me. So that's good for Google. Also, once again, the drawbacks, very expensive stock, but they are one of the good players, key players in the AI space, so we can think that valuation trades at a premium there. Next up is Meta. Let's see what loads. Meta earnings, let's see, earnings quality. Earnings quality is 57, very poor quality earnings, so it needs to improve its balance sheet as well as the income statement and what drives earnings there, so it needs a lot of work there. Combined alpha model, 43rd percentile rank, so it's not particularly attractive on that basis. Valuation momentum scores very low. Then bottom basically 20% of the market. Price momentum bottom 20% of the market there, so there are a few problems to deal with. Intrinsic valuation, relative valuation, the bottom 30% of the market, so it's not a critical play for intrinsic valuation. Is also not attractive on a relative valuation basis, so that's the key thing. What is interesting is the smart holdings, the smartest people in the room, the best performing fund managers are still buying it, very high ranking there. Short interest is very low, so that is a critical thing there, but watch out for the valuation. You can see once again also somewhat of a social media AI play, very expensive on that basis. So Meta really needs to improve its earnings quality to be a top-notch low risk investment. Next one is Amazon. From a StarMine data perspective, earnings quality is the bottom 20% of the market, basically. Percentile rank of 21. Combined alpha model 20% there, 22% percentile rank, and valuation momentum 15. So there's some significant downside risk in Amazon based on the StarMine models, because you've got credit risk there because of all the AI spending. Intrinsic valuation bottom 20% of the market, relative valuation bottom 30% of the market, so not particularly well on that basis. But smart holdings have still been increasing their holdings there, so there are some people buying the fund managers buying it for the long term. Their short interest very low. Insiders selling by the hordes, so you got to watch out for that. Very poor support on the insider model there, but fantastic using these models really identify the risk in a particular stock, whether it's the earnings quality, the credit risk. So this one, similar to Tesla's, got a lot of work to do to improve the actual quality of the earnings as well as the growth rates, etc. Price to book ratio, price to cash flow, EV to sales, all kind of a mixed bag there, so not particularly good. But so far, Apple's looking good, Google's looking good, NVIDIA looking good, as Meta, Amazon, Tesla, that's got lots of room for improvement on the fundamental side of things. So that's the wrap for the MAG7 from a StarMine model perspective. And that brings us to the end of this edition of Cloud Chart and AI Trading Review. Thank you for watching. Until next time, happy trading. Bye for now.